Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for the special Tuesday episode on May 28th, 2024. And we are recording this at 1 p.m. Eastern Time, and this is episode number 431. So today I've arranged for Norman Hallett to join us, and you should see his screen right now. And also the option professor is back to moderate, so I'm going to turn it over to him.
Sure. Okay. Thanks, David. And good to have everybody here. And what a good weekend we all had, I hope. So today we're going to talk to Norm Hallett, who's going to give us a lot of insights into not only the discipline of trading, which is very important, the mental part, but he's also going to explain how he helps people improve their chances, obviously, to become a funded account, which I think is very exciting because a lot of people out there would certainly like to use other people's money to trade if they could, but you have to hit certain criteria to do it, and Norm helps people try to hit those criteria. Before we get started, Norman, how about a little background on yourself, and then we'll get right into it.
Well, I appreciate those kind words, and a little background on myself. My wife said, I didn't know that you worked for them or you did that. I've taught dancing for Arthur Murray's dance studio. I was I only had the beginning lessons where I got them to think about 12-week lessons. But in college you do just about everything, but that's where I got my first taste of the market. There was a guy named Harry Brown who was really big on gold. He was one of the original gold bugs. That's got me in. But since then, I've worked for organizations like Payne Weber. I've worked for large option firms in the early part of my career until I fell in love with the futures market. I always said, if I'm going to lose, I want to know today instead of waiting for an option to expire down the road. So this way I can get on to the next trade that would be a winner. I think in trading, I've concentrated a lot since 2000 on the mental and emotional part of the game. I think you see that in the background here behind me, the disciplined trader. And that's really where I've concentrated on for the last 20 years until about 3 years ago when I bumped into prop trading, where you trade their money and get 90% or 100% of the first 25,000 in some of these firms of the money that you earn. Well, how can they give you the majority of the profit that you earn? It's because they're collecting fees from the same 90% of traders that refuse to follow a trading plan consistently and let their emotions take over. So it's really part of the same game. But what's interesting is that you mentioned that it would be nice to trade somebody else's money. I thought when I first dove into the prop trading that it would be the smaller accounts, the $5,000 accounts, the $10,000, $20,000 accounts that would see the beauty in trading hundreds of thousands of dollars for a prop firm and see the beauty of that. But it winds up that it's the big money that tends to come in here and say, hey, I'll put my 250,000 I'm trading, I'll put it in at 5% now and trade their money. Why shouldn't I just earn a lot of money on the bulk of my capital and trade their money? So I do think that it is. I've written a paper last year on the death of simulated trading. I mean, why would anybody trade on sim trading when they can do the same thing while they're literally applying for being funded? So it's a lot to say about that, but that's really not the purpose of this meeting here. Just a little bit about my background. I may talk a little bit about the importance of being conservative when you're trading, and we'll go through that. Yeah. So appreciate you having me.
Sure. And Norm, you know that having a plan is going to be a key if you're ever going to be successful, and then the discipline to stick with it. And then, of course, the mental part of it, and also the sizing. And like you were talking about, being conservative as far as, because big drawdowns are hard to make up. Little drawdowns are easier to make up, common sense. And so I think that's probably what you really focus on is come up with a discipline where we're following the trend of this stuff and come up with a discipline on how many contracts you're going to use, And if it tells you to get out, get the hell out, even if you don't think it might. And maybe in hindsight, it's not, you could have not got out. It's that questioning your discipline, is going to do more damage than it's going to improve things,
Yeah, I have learned this exercise that I've been. I'll be coming out with a book in the next couple of months called "Their Money, Your Profit," and it's going to be all about this whole growing concept of prop trading. It's just it's just interesting how fast it's growing. I know Apex, which is one of the biggest, if not the biggest, um, they've they've almost $200 million they've paid out over the last few years to successful prop traders.
Yeah. So the numbers are there.
The numbers are there. And not only that, but it's growing. In other words, this month will be their strongest month since last month, which was their strongest month. And out of that 200 million, 70 million has been paid out in the last 3 months. So they're going through growing pains. We don't see it here, but in talking to them from time to time, there's just a wealth of interest in what this is about. But I think what it's opened up a new science to me of trading, and that's position sizing.
Yeah.
I've always been somebody that says, hey, if you've got a good trading plan, I've written books on trading plans, as you know. If you have a trading plan that works, 65% of the time, just, don't vary your position sizing, the number of contracts. Just do the same thing over and over. You're going the statistics are going to work for you. But I have learned a little bit differently here in the prop trading world, because there is a red line that you don't want to breach, and they don't like a lot of drawdown. In fact, a lot of these trading firms, including the big ones like Apex, they count your open trade equity against you. In other words, if you have an open trade equity of $1,000 and you don't take it, and you put a break-even stop, normally you'd say, all right, I broke even, I should have taken 1,000. But the fact that you didn't take it, they count that against you toward what the red line, and that's big, which means to me that what you need to do is incorporate something that I did very little of in my career, and that's scalping.
Yeah.
Because when you have a trigger that the majority of the time will give you what I call a pop, in other words, a movement in your direction with some sort of power, then you want to utilize knowing that and take the scalp, take that low-hanging fruit, and then with the remainder of your position, go ahead and manage that for a bigger trade. So, in a sense, taking on less than 2 contracts in the futures market, we're talking now, taking on less than 2 contracts is going to work against you, I believe, with respect to staying away from that red line. So
And are you talking about full contracts, or are you talking about the micros, the minis? What are you doing?
Well, that's a good question. I mean, you could be qualifying for, you can be testing for anything from a $25,000 account to a $300,000 account. But I do think that it's good to think small as far as the number of positions, and let the leverage work for you, which I think most people don't quite appreciate.
Yeah, there's a lot of leverage on these things, no doubt about it.
Especially, and now I've been testing now, starting to test last week, the Bitcoin contract, which is starting to get, still not tradable really from a spread standpoint, but it's from a volume standpoint, it's starting to get there. There's a lot fewer gaps, and with the micro contract, it can be a tradable thing. In fact, the micro contract is the contract that's tradable. The big one hardly has any volume. But the idea there is that there's a lot going on in the futures market, and when you can develop a trading plan that works for you, or try mine and adjust it if you want. But the idea is that I've incorporated all of these nuances that make it a lot easier to qualify for the money. And from there, it's up to you to see how strong you want to go. But I guess if I had a weakness, every trader has a weakness or I would say that maybe I should be going bigger sometimes. But I like the steady flow of income from my trading, and so I prefer to stay on the conservative side. But there's some people that I've trained and that I know that go much bigger than I do with these trades, and they're having a lot of success. Their numbers are bigger than mine, and so on. But everybody has their
Comfort level. Yeah.
yeah, everybody has their comfort level. I mean, and really, you have to do a lot of self-inspection anyway in trading before you can, be successful in anything. So,
Yeah.
but we've got some terrific markets to trade, certainly in the S&P and so on, which I've got.
Oh, absolutely. Let's swing over into some of this stuff now, because I'm getting a little smell that this S&P is running out of steam a little bit, possibly. And what are you thinking here? You want to look at the E-mini?
Well, yeah, this is the E-mini S&P right here. You can see the trend. This is the 8-bar exponential moving average, which I really like to follow as long as we're riding that. I always look for 2 consecutive closes on the wrong side of this to consider getting out. And look at this. Here's one close below. I'm assuming we're long here, but not the second. Here's one, but not the second. Here's another. Now here's the second close below, which is I would put my stop in down here, and we survived that. So even all the way up here, we don't have 2 consecutive. We have one here that was tested, but you see how well something like the 8-bar exponential moving average is. They call it the golden mean. They used to call it the golden mean. Some argue with me and say it's the 9 EMA. Either one, and then we'll give you pretty similar results. But to your question, this right here, this formation, and we've been together before, so you know that I was going to say something about it. When you have I call these indecision bars. 1, 2, 3. When you get especially a series of them, all I really need is one for the trigger. But if I have a number of them, and then we break through the 8 in the opposite direction, in this case, where the hesitation candles bodies are on one side of the 8, and the breakthrough is on the other. Got to wait for the close. Close is on the other side. This is a short signal to me. Now, it didn't work out so far. My stop is up here.
Where we are now, you're getting the feeling that it could be a sell zone, right?
Yeah, I mean, for the trigger reason, and of course, I feel.
And then your number comes in around 53.12 with the yellow line. I have a line around 53.14. I think we're trading 53.19 now. So yeah, if we started to, and then that RSI underneath, what's that telling you a little bit? Is it like a little bit of a divergence? I don't know.
It's I would say that it looks like it's a match or a slight divergence, which would be good. No, but look what's happening here. I mean, if we had Carolyn with us, not Carolyn, but Hema.
Hema, yeah.
I refer to the RSI queen.
Right.
I think she'd be looking at this as you see this. I will say that I think people read the RSI a little bit incorrectly. When I see this, now this is an RSI that keeps touching the 70. That's what this line is right here. I think 80 is more of a place where you can call it overbought. But look at this continued strength, and you can, and it results in this kind of a move. Now, there is a pretty good chance. The strength of this market, you almost have to think it's a 50-50 chance that we'll see the same kind of accumulation here with a very similar uptrend going on. But we need to break through this mess right here. And I did get a short-term signal here, which at best may be just stalling the movement higher.
Right.
But these 2 lines here are just are lines that I drew on the body of this big. I think anybody that, again, those who use candlestick, I think you need to maybe look to emphasize the body rather than the tail. In fact, Japanese farmers who put this whole thing together with candle charting, they almost ignored the tails unless they came in something like this near the bottom of a run. But generally, a shorter tail like this with a longer body, you can make up stories, but that's not why I looked at the short side of this. It's because this is a very strong signal. And we're against the double top. If I had, this is a market where we could wind up going, we could play between these lines a little bit more. We'll have to see, but the holiday kind of hurts consistency, but we didn't jump out to anything. Sometimes when you come out of the holiday, you get a big, you get something that that is a little bit contrary to what you normally would get because of that broken day.
Yeah.
But didn't seem. Here's a similar formation where you have a hesitation candle with a candle that just breaks through the 8, and it led to something really nice here. I know the first.
If you can get that yellow line turning down, which would mean we're under 5312, 5300,
Right.
and that RSI down the bottom turns down, then you have a case to speak of that there could be a more of a significant drop. But without that, the thing is still pretty firm. Huh?
Yeah, I mean, I'm when I say I'm short, I'm short as when I approach a trading day, I give myself a range of power that day. I'm either going to have two contracts or 6 contracts. I won't go higher than that or lower than that. This was a 2 contract trade because although I'm a guy that, and you have to, traders out there, you've got to recognize who you are. And I'm a guy that likes to be in the market when I can in a responsible way. I got a signal, but it's not a pure signal. I do like the fact that it's could be a double top kind of thing if it breaks, but you cannot ignore the power of this market
No.
and these slopes that are going on. So to me, it's a minimum position of 2.
Yeah.
As opposed to something like this, that would be more of a 3. Because coming off a bottom, consistent with the power of the recent trend, a short risk in taking the position here and putting your stop here. So again, position sizing, I can't stress how important that is. And what I've been, when I work with one-on-one with traders on prop trading, we talk a lot about position sizing because I think it's a risk management tool that allows you to be in trades that normally you wouldn't take, but and you can go stronger on stronger signals. So,
is primarily people using the E-mini to qualify for these accounts, or is they using other markets?
they're using E-mini, but what they're using, and I'm not a fan of 1 minute candles. I'm not. I think maybe I'm too old, not fast enough. But 1 minute, I will go 2 minutes, 2-minute charts, which can give you nice signals when I'm day trading. But they do take on, in a $50,000 account, some are comfortable with 2 full S&P contracts, E-mini contracts. I tend to like 6 micros and treat them as 3 and 3. On a $50,000 account. I'm now testing, they had a special recently on the $250,000 account, the same charges as a 50. So the people who are making big money in prop trading have multiple accounts, and they generally focus on the $50,000 account size, and they have 10 or 20 of them going at the same time, and they use something called a trade copier to make one trade and put it in all the accounts if they want, or half of the accounts. So in the same one stroke. This way, because the rules are such that they you can only take out a maximum amount of money at each pay period, of which there's a couple of them a month. And if you have 10 accounts, you can take out that minimum on each of those accounts. So if a lot of them make a quick trade of $300 on all 20 accounts, and they stop for the day for $6,000. So there's a lot between testing for an account and having 20, which is a process that I am developing more and more as I'm training people in the early steps to qualify and then to move away from that what I call the red line, which is that line that you don't want to breach and bust out the account. But the great thing is that once you get, after you earn $5,000 or $10,000 on an account, There is no red line. You can trade normally, which is like the third stage of prop trading. First being qualifying, second being actually trading funded money, and the third developing that distance from the red line so that it's no longer an issue. That's where the real money is made. But there are guys taking out $100,000 every pay period. So I'm not there yet, but I'll get there. So it's quite a thing. But as far as the S&P is concerned, look, it's a strong market.
Yeah.
And they seem to be resisting. I think it's a comfortable place for people to believe that we'll just kind of stay at the same interest rate level for the foreseeable future. And that's okay because people are starting to manage that. And now it's okay to to pay so much for a loaf of bread and so on. You kind of get used to the stuff you cried about.
Right.
And it's true of trading too. They're becoming more accepting of the high interest rates. And once they start dropping, when that happens, hopefully that'll happen sometime this year. Now they're talking September, December as the first rate drop is possible, where they had the first one going on, I think, next month in the beginning. So, these are all factors that surround the chart. But remember, in technical trading, the price that you're looking at has already considered everything that we're talking about,
Right.
including what we believe to be what's going to happen over the next. Used to be 6 months, now it's probably 6 weeks. Taking into consideration what we believe will happen in the next sequence, and it's in today's price. So all of this is just banter. You've got to watch the price and the chart. It's all in the price.
Right. What other markets are you kind of following? Or you normally used to follow those currencies pretty good?
Well, I do follow currencies, but in our last meeting, I guess a couple of weeks ago, and the meeting before that, I've been really jumping on the silver and gold market.
Yeah, they've been very, very hot. You want to take a look at that? Yeah, you want to take a look and see if they've
yeah, let's take
run
a
out
look
of steam or.
Yeah, I've got here's the gold and silver charts right here. I'm going to show you the silver because that's the one, that silver gold ratio we talked about when we were kids. It was when we started trading, it was 50 to 1. You could divide the price of silver into the price of gold and you get 50 out of it. Now it's 80. Actually, it's probably in the high 70s now with today's move. Today was a pretty interesting move. Let me reduce this here.
Yeah, they say it's going to 80 and it's at 73, something like that.
Yeah, here's the silver. Here's the silver. That's today's chart. But let's look at the day chart. But look at this move right here. And we talked about, and I think we took a look at this signal last time. This is why I was so bullish on it.
Do you want to change your chart? I'm looking at Gold Master Trader. I don't see your chart up. I don't know if anybody else is. But.
You don't see the silver chart up right now?
No, right now I'm looking at Gold Master Trader and Golden Glitch and Strategy Guide.
I don't know why. Let's see. I'm going to stop the show.
No, Jim, you're on the wrong screen.
I didn't change my screen. I'm just saying what I'm looking at. I didn't change anything.
Okay, yeah,
Okay.
I'm looking at the screen.
Norman,
I'm good.
Norman, I can see your chart.
Okay, this is the silver right here, and remember I talked about this. This is what we call a loaded gun. This is one of the main triggers in one of our in our basic trading plan that we use, and it's what I call a hesitation candle, and then a strong candle through the 8. This is a shorting mechanism. Now you've got to draw your trend lines and make sure and have a couple of different responses to that. But once you see the signal, you've got to be almost ready to go. And here's one right here. Really like this trade. Again, it's consistent with what's been going on. I think if Carolyn Borodin was here and drew her Fibonacci charts, she would see this right at that, looks like about the 50% level. Right there. And then you have this right here. This is a signal to go long. You've got a number of hesitation candles shooting through the 8. This is the 34 EMA, incidentally, which we use as a backstop, and we also use it not for us to stay away from trades. Now we would actually be staying away from this trade because of that. But when you have this 34 to your back, and you cross the golden mean, the 8, this is a major signal, and knowing, having done some study and knowing that silver needs to catch up to gold, it did a lot of catching up in the last couple of weeks. I mean, this is a move from 27 to 32 today. I mean, this is actually yesterday's trading. So that kind of combining, if you've opened your chart and you're making any trades yesterday, you're seeing today's trades added onto it. But this is a big move. This is, $1.50, or what is it? It's more than that. It's almost a $2 move, a little over $1.50, and we're just testing the recent high, of which I would suggest look to be broken. We'll see, but again, it's only a guess. But this is a secondary signal to go long. The problem with going long here, as opposed to here, is that look at, if this is a trigger and you put your stop below that combination, you're looking at a pretty good. You got to watch your position size because you could lose in any trade. This is a lot less. Not only is it in a better situation, when I love to get in when the 8 is very near the 34, and then we start to move higher, move away. The problem with here is that when a market moves too far from the moving average, and look how far it got here from the 8 here, and then it came back to the 8, but we're still a long way from the 34. It doesn't affect the short-term strength, but I would look for to have another correction here would not be odd, as we continue to be very far from the 34, and we're already getting far again. But look what happens. I don't see any really here, but here's where we got far from the 34 and we corrected to the 34. So I like to look at these two moving averages to give me a kind of an idea of what could be. But I like to take my signals and then defend. And in this particular case, I like, once you have a market that has broken out, I mean, you didn't know what was going to happen from here. This market could have had some resistance here, blew right through it. So when one takes a position here, I would be looking to take my scalp actually a little bit earlier, but at least take the scalp before the high here, and then leave the remainder on. I like to use, a lot of traders that teach say, the low of the previous bar. So when the market proves itself after this area right here, once we get to here, then I like to go 2 bars back, of which we would have been out right here, which would have been a pretty responsible place to. In other words, right here, once this bar started, you'd have your stop 2 bars back here, and you would have been stopped out here, and you would have taken a nice profit. And there's a number of reasons to believe that would be a good place, not only because of the rule of 2 bars back, but because, again, we're getting a lot of good things, a lot of good reasons to look to take your profit as we're separating from the moving average. So it's a very strong market. I think the big boys are likely to be buying silver and selling an equal amount of gold against it. And they would have made a lot of money today, because in the gold market, this is a similar chart in gold. Let's look at the daily. This is the daily here. I still haven't figured out how to, somebody tries to tell me, but I don't know what. But look at what happened here. I mean, we're really not moving in the same way. This is a $15 move in gold, but you can see how silver is kind of taking over the power. Here's that signal to go short. Same signal as on the silver, but it did move. It did give us our scalp, and the jury is still out. You take a look at this chart. You'd almost say we're going to go sideways. I mean, this is something to consider down here. This is something considered double top up here. There's a lot of reason to believe we're going to be sideways while silver catches up. Yeah, maybe I'm making up a story. But this is something that I had in my, when you're looking at retirement accounts and some, I like to trade small positions with the daily chart. But this is that same thing, a small body, big move, like we were talking about before. This body is not on the other side I like to see it on one side, but it's straddling the 8 here. That's good enough to not quite as good, but it certainly led to a nice move here as we took out this high. And you still would have been in this again. No, look at it, two closes below. We're not seeing, although this is a reversal signal. There's a lot of reason to stay in, and you could have taken your profit here. I would have been very fine with it, or taken partial profits if you had multiple positions. But look at how it just stays nicely on one side of that 8 until we break it with some authority, of which we go sideways. So I think if you're not using the 8-bar exponential moving average or the 9-bar, you should consider it as far as you know, how far you want to get into a trade. Even 2 bars back, you would have continued in here. This did not break here, so you would have been in, and you still would have been in. You would have been out right here if you use that. And you know, you can kick yourself, or you can do what I do, and that's exercise gratitude. Thank you. You know, I'm thankful for what I've gotten, and I'm a giver, so I want to give the rest to anybody who would like it. And maybe that's you, Jim.
Yeah, probably. Now I got a question for you on the silver. Back around May 17, May 19, the RSI shot up into the 80s. Obviously, we had a correction off of that down to our 30 bucks and change. And now we're on the horse again. But are you seeing anything on this rally with the RSI versus where it was on the 17th or 19th that would indicate that you got to monitor this rally, in that it might be going up on a little less relative strength than it did 2 weeks ago?
Yeah, that's a good question, and you know, again, that's another one. There seems to be a fight not only in momentum but volume and other things. You know, you got to believe this market is likely going higher, but you know, you got to wait for it to happen. This is a signal to go higher on the daily chart, so I'm pretty confident that we will be looking higher. But again, that this keeps me, my doubts keep me not out of the position, but you know, and maybe I'll have 4 micros in a $50,000 account. You know, and again, I think if people are going to slap me for the way I trade, it would be I don't go strong enough when I can. I just learned that you're better off sticking with the conservative and wishing you had more than having a big position and having it not work out. So very satisfied with taking a smaller position here, even though I think it's a relatively strong signal. You got to get through here. I don't like the fact that we're now we're going to have to wait for the close today, because what I'm seeing down here is not the power I'd like to see in the momentum. I mean, this is a descending momentum to some. I mean, we have a big move here, and we're not looking at an equal strength in the RSI and momentum. So that may have been corrected here. I don't know, but I think today and tomorrow we want to see where this RSI is going to go, because you know, you already in the shortest charts, you're already seeing some struggle of what you would expect at this high. So don't know. You know, my guess is sideways for this week. I know that's a question we ask ourselves in the beginning of the week. But you know, if I were a day trader, and I am, I would be looking to for short positions, possibly being triggered at this level we're at right now, or a little higher, and if I got a signal to go short, and again, a very minor position. And I would probably go a little stronger on a day trade if we did come down a couple of dollars. But you know, either way, the short-term charts, you know, have their own consistencies and so on. But yeah, I am concerned about I'm not seeing, you know, this is usually telltale, but of course that resulted in some easing of the upward pressure. But you know, that's a very good question, because there is no answer quite yet. Yeah, we've crossed a bit, but that was because of today's high. I'd like to see where this market ends up. I think we could very well end up at new contract highs. I mean,
yeah, I mean, it's the kind of market that could shoot up to 35 or 40 or 45 bucks, because it's that kind of a breakaway. Yeah. Or it could be telling us that that high point of 33 is still something to be respected. And if it can't be taken out, like you were saying, the longer term moving averages are way underneath the price. So
yeah, and you got to stay small, because these movements are now, you know, $1 a day in silver.
Yeah.
And that's a $5,000 in a big contract.
Yeah.
I guess here I really, I mean, look at the difference here in the RSI, in the gold, and you know,
That's what I'm seeing.
you know, generally when you have these huge breakouts, the markets move together.
Yeah.
And although, you know, we can say that's happening in a broad sense, the micro view here is, I mean, we haven't even crossed here. It was still on the correct side of the 34, on the wrong side of the 30. I think we're going sideways here. And for smaller accounts, this could even be a better day trading avenue. You know, I would be looking at this bar right here, the top of the bar and the bottom here, and developing a range and looking to sell at the top of the range, buy at the bottom of the range. I think that could be a pretty good approach for the rest of this week. When I'm viewing this momentum, I mean, we're literally at the 50% area right here, when we really should be a little bit stronger if we're expecting the market to go higher. So, you know, sideways is probably the course of action for the gold, which means to me that there's going to be likely a drag on the silver, and therefore, you know, sideways there too, with a lot more volatility, you know, so.
Silver's being thrown into the old AI story because it's used in something with copper or something like that.
Yeah, actually, it's interesting. That was the next chart that I was going to go to. The copper, that's been my really great market for me in the last week. Here is that signal again that we talked about. This is the loaded gun simple trading plan signal. There's a lot more to say about it, and I'm probably giving you enough to hurt yourself. But you can see, it looks like the barrel of a gun pointing higher, and here's the trigger area. So you have it's a two candle trigger that you want to see the hesitation on one side, the movement through the 8 on the other. But look what's happening here. You've got a lot of accumulation at this level. You've got a test of that accumulation that survived another test, and now you've got a signal. Incidentally, here's another signal to go along that didn't work out. So you need to know, and I wouldn't have taken this, and there's a reason, not because it lost, but there are other reasons. So don't go trading a plan that you don't know about. But for me, I'm looking to take if I had a 3 to 6 range of contracts to take, this would be a 3. You know, I don't like this accumulation to get through, so I'm not. It would be a 2 or a 3. Again, I'm always going lower than I need to, but my scalp would have been in here, and then I would have followed this up. Look at how nicely hugs here. It would have taken a little bit of time, but would have been out right here with this reversal of a signal, or even probably would have stayed in for a small body like this, but I would have been out here. So the second one is here. So, you know, it becomes tradable here, but the copper, and the thing I want, let me say a word about, you know, about changing time frames. I like to go between the 2 and the 5. This is a 5, and if I saw this happening in the 5 and I didn't get a signal to go short, I may be looking at I would be switching over to the 2 and seeing if I can't separate some of these lines and have so. And as you can see, you have a very similar. Here's a kind of a straddling. I like to see the body a little smaller, but you have a straddle here of the 8 and then a movement through the 8 after a similar type of, this is an engulfing pattern. It's not the same, but it did happen at what appears to be an upcoming high. This would have been a take, again, in a small way, and you would have been better for it. Actually, when I take my scalp, I move my stop to break even, and it looks like I would have stayed in it here. Looks like I would have been all the way through this, and I think I was. This is this happened, if it happened in the, yeah, this was a big trade for me. I did have a few positions here, took one out early, and then took another one out in here and left the other one here. But look at this. Here's another one of those signals that I just mentioned. And I love this better than this because, and this is a 2. So if you want to lower your risk tolerance, go to the 2, and look what you're looking at here. You see a doji here, which is the perfect spinner, right? Spinner, small body, a movement through the 8, which is not dramatic, the 8 being the gold line, which is not dramatic, but it is nicely taking out all these body highs here, even the candle, even the wick highs. And you're looking at, I like to take this signal when 2 moving averages are coming together like this. And look at this. You would have taken out half your position at least here. You don't want to test these. You don't want to test a resistance area. This is a resistance. You never know. And you see where it did break through, but it tested that same level until you had another signal here to go along. Look at this. So you need a good trigger, and you need it in the right place. Here's a trigger that would have been taken, but not taken for several reasons. And I can describe that if you ever decide to own the Disciplined Trader Mastery Program or the Disciplined Trader Loaded Gun, Simple Trading Plan Loaded Gun. Here's one that doesn't work out. Here's one that did work out. Right here. Here's another one that did work out. So it's a very consistent way of getting into trades, but copper has been a terrific market. Let's look at yesterday. This again is the 2. Let's go back to the 5 since we're going to be running around here. But they used to say, I don't know if you remember, copper's in the dropper. Was that just the guys?
I remember that one.
You got coppers in the dropper.
Coppers in the dropper.
There's got to be rules. Here's a take signal that's with a very big body. But again, it's got to be very minimal. And when it doesn't work out, you can't stay in a trade too long, even when it's you got to minimize your risk. So you need to. We have our numbers in Loaded Gun. I don't like to take it, past a certain amount of bodies. The further you get away from a body, from a trigger, the less influence that it has. You want a trigger like this that gives you a nice movement right up front. There's no doubt about what's going on here. You've got a very strong candle taking away a lot of these, although there's going to be, again, this would have been a minimum position for me. Why? Because my stop's got to be down here, and therefore, I'm not excited about it. I do like the fact that I always think, what would Jim do? And he would be looking at the RSI. And so
I always want to know if the car's running out of gas.
That's it. And don't say that, because I got an electric car now, and you constantly, I had one years ago. I had the Leaf that only went 100 miles, and all you could do is keep your eye on the mileage, because if you got to 48, 49, you weren't getting back home unless you turned around.
Yeah.
And there weren't any, 15 years ago. But now I've got the Ioniq 6. I've got a real car, but I have this car, and it goes 360 miles.
Well, that's nice.
Cough, cough. In reality, it's more like 300 or 280.
Now, is it 300 miles if you're driving, or is it 10 miles if you're on the I-95 at rush hour?
That's an interesting thing, and most people don't know that. That's where it's about 220, believe it or not.
That's not good as
60. And so, but look at this beautiful, where it's coming across. I'm going to call it a double bottom because I'm feeling good. But you've got a divergence here. You've got a strong signal to go long. In the bullet, kind of a signal that you like, and look, it does well for you. And I would have taken my scalp right in here. I don't like to take my scalp past the breakout body length. So I would be taking it right in here, and I would continue with the remainder until I saw a reasonable break of the 8, which would be in here. Probably would have, well, again, can't discuss. It's hard to give you pieces of a trading plan, but I just want to emphasize the importance of the right kind of trigger, and then using your position sizing. I mean, if you went long here, which I would have in this kind of thing, you would have still had a small position, and actually you would have stayed in this. The stop would have been down here, again, but this is a reversal. So, you got to be very careful with where you take these positions, and I can teach you how to do that. But again, I'm always looking for a kind of signal, like here's another one, where you have the signal that at least worked out for your scalp. When you're dealing with prop trading, the challenge is to stay away from that red line, because again, they count open trade equity against you. Right. So even if the trade is not going to work out, If I would have taken this, let's say, a trade where you got your scalp, and then it backed up, say you got your scalp, and if it backed up to be break even, you got your scalp, which is going to work for you and pad that, and then on the break even, it's going to work against you. It winds up being a wash. Okay, so you've got to employ scalping, I believe, when you're not all of it, because listen, we're not in it to just scalp your brains out. I don't think. I think we're all in it to catch something like this in a responsible way. At least I am. And so it's, here's, look at this signal right here in copper. Here's a signal that I'm going to say we wouldn't have taken, but you may have if you don't know when to take it and when not. But here's one that would have taken for look at this, two bottoms. Let's see if there's a divergence. Actually, there isn't a divergence, but so that would have made this a small take, maybe 2 positions. But look at this. It's exciting when you've got a couple of, we've got a few triggers like that that work pretty well, work very well. So
before we run out of time, let's hit crude oil, because it seems that the correction is behind us and we're going into the summer season, and we've got possible bombing of Russian pipelines, and so it could get kind of exciting. What are you seeing in the crude oil? Because some people are saying we're on the precipice of a pretty good summer there.
Yeah, I don't know. I follow the chart. I can have my own opinion, but I just believe that we are going to have a slowdown at some point. And when that happens, there's gonna be less of a demand on crude oil. But I'm looking at, this is the 5-minute chart, so certainly having a very nice day. Here's an interesting signal that we've already talked about 20 times, but leads to something pretty nice. Let's look at the daily chart and see.
Because OPEC is supposed to keep their cuts in force until the end of the year.
That's
so that combined with the Russia deal, combined with everyone's out there driving, is supposed to be a recipe for the 75 number is done, and now it's time to go upstairs.
Yeah, I mean, this is a darn good-looking chart. Don't worry about these lines. They're from a small, a lesser chart that I was looking at, and was, I always need parameters. I'm drawing these horizontal lines all the time because I like to have boundaries to, I like to be and there are support resistances, and if I can strangle you, not you, Jim, but if all the people are listening, I'd like to strangle you and say, not strangle, but grab your shoulders and shake you and say, honor support and resistance, honor support resistance. They used to call these they called 3 soldiers. If we end here, that's a pretty bullish formation here. It's not the most reliable, the three soldiers, but it can give you, if you notice, look at this mix, you're not seeing 3 of anything, but when you start to see, and this is a little bit big for a soldier, but the 3 lines can, you look for consistency in the color a little bit. But yeah, I would have to say, where's that? We're seeing some divergence that you like to see. We've exercised some upward movement because of that, or with respect to that divergence.
Yep.
But we're at that 50% line again, and we need to. This is the 34. I'd like to see it get over that with some kind of conviction. The person that taught me about the 34 doesn't take anything. I disagree with him. I think you can deal with your position sizing and not let go of a lot of what's happened. But there is some, it's a Fibonacci number, and you need to respect that too. But if you respect too many things, you'll never make a trade.
No. Looks to me like 81 and 85 are 2 big numbers right now. 81 and 85. You get above 81,
no question,
get above 85, it's gonna be able to have some, and you throw in a geopolitical event, you're gonna see something happen.
Yeah, that's the 82, and I think if you look at the 85, that's of course the more obvious one in this area here. Let me say 85. Yeah, I mean, there's a number of places. There's probably some hesitation here, and that's the 84 that you just looked at. Yeah. So, you know, this, but we've got to break through these. And these are, and you can see when you have support and resistances, these are, listen, people have investment. When you see an accumulation, there are people going long and short, and they try to push their position many times by increasing the number of positions that they have. And the more they're wrong, the short side here, the more you can have these quick elevations as they bail out. You see some accumulation here. And again, we've talked about the old protractor, where I always measure the sideways movement and then extend that same horizontal line to vertical, and you can see where we seem to be accumulating here. But this accumulation here is going to lead to something. Yeah. We're either going to be at 70 or we're going to be at 85. So we'll see what happens, but I can't tell.
Yeah, no, it's trying to get off the mat, and if it gets above 81, 85, it is off the mat. If it fails at 81 or 85, then like you say, we could go right back in the soup.
Yeah, and there's a number of ways of doing it. I just coached somebody this morning, Maureen, who a very experienced trader. She's terrific, and she likes to trade the S&P only, and just goes ahead and changes her candle sizes or time elements and uncovers signals. I like to use the 5. I like to work while I'm trading. So, you know, since I have a system that depends on the close of a candle for me to do anything, I've got 4 minutes and 59 seconds if I get into something before I need to do something. I've got my stop in already and so on. So I like to take as many signals as I can. So I look at different markets, the ones that you know, here's the Japanese yen, the euro dollar, which I really like. These are the main ones that I kind of look at, the S&P, the euro dollar. But I have the NASDAQ, and here's of course, the bonds are an important chart to take a look at. And you can see that, you know,
the yields are rising a little bit, I think.
Yeah, we're not very friendly today, for sure. But again, I like to look at many different charts and try to identify my strongest signals, my strongest candles, as opposed to looking at one chart and decide and waiting for that particular A+ signal to show up. I can get a lot more trades if I'm willing to look at other markets. But before you do that, understand that each market is different, and something like crude tends to move in about a 5-minute time frame, and then it stays there for a while. So you can get some real good jumps in there, but you got to defend yourself, you know.
Well, in the last 5 minutes or so, do you want to get a little bit more into, like, when people call you, how are you going to help them with regards to the funded account, and how are you going to help them just their own trading?
Well, if you go to thedisciplinetrader.com, you go to thedisciplinetrader.com and you just sign up for my 4-minute drill for traders. Again, that's a mental and emotional thing. It's a 4-minute drill that kind of gets you right between the eyes. There's over 200 of them that I've made over a 4-year period. Sign up for that. Opt in to be by my side, and that will put you on my general list, of which you can get what I do with you start getting information on prop trading. But if you go to theirmoneyyourprofit.com, you can see a little bit about the loaded gun simple trading plan that's been working for everybody, and what we use for prop trading. I think theirmoneyyourprofit.com, kind of take a look at it and get a feel for, listen, you got to like the person you're dealing with. You got to kind of say, hey, that's my kind of guy or gal, and kind of get a feel for me. And I guess I'll give you one more thing that if you can put it in the chat, I guess that's what you're doing. I appreciate that. Just use my email address, nhallett, NHALLETT, at thedisciplinetrader.com. Or if you go to thedisciplinetrader.com, there's a contact thing there. Just click on it and say, hey, send me info on loaded gun, on your work with. I've done a study on different prop trading firms. Love to show you that so that you can decide on your own which is the kind of prop trade, which is the prop trading firm. If you make the same decisions I do, I use how long have they been in business? Are they growing? Can you trust them, and so on, and have they been in business long enough? Because most of these prop trading firms, in fact, even the good ones, haven't been in business more than 3 or 4 years. So you got to be very careful. I've done that study. So if you want that study, just go to thedisciplinetrader.com. click on contact and just say, hey, send me the study, and I'll be glad to. And make sure you give me your email address, and I'll be glad to email that study to you so that you can compare and contrast for yourself. Or again, you can write me directly at nhallett, NHALLETT, at thedisciplinetrader.com and communicate with me there. But I'd love to show you what I got. I really think this is the future. I know it is. You know, it's growing at a. It's kind of like, I think, the position Bitcoin was in, where you have a lot more doubters than you have acceptors. But I'm starting to see, you know, a rollover in that enthusiasm, going from how could this be true to I can't believe it's true. Because once the first time I asked for $1,000 the first time, they wired $1,000 into my account. They do it every other week, once every 2 weeks. But the first time I did it, I called my bank and I said, "Is this real? Can I use this money?" And they say, "Yeah, it's your money."
It's like anything else. If it's new to you, you know, it's going to be a little strange. But once you start seeing the money come in, that's nothing wrong with that.
And so I'd love to coach you there. And I've got to, you know, watch for my book coming out on it'll be on Amazon, of the same name, Their Money, Your Profit, and kind of go through the basics of it. I hired a firm to help me with some of the nomenclature, you know, and they did such a terrible job, I have to redo their redoing. So I've got about a month after I thought I was going to come out with the book, but you know, there's nothing, you know, you still got to sit down and write it, you know.
Sure. That takes time too, right?
Yeah, it does.
All right. Well, thanks for being here. As far as Option Professor is concerned, if you're new to the market or experienced, I share with you my timing indicators that I use, and I also obviously are very experienced and knowledgeable in options, so I can explain all the different strategies and how to trade them and this kind of thing. So optionprofessor.com, you put your information in, I talk to you directly, and we see if I can help you. Okay. Hey, Norm, always great to hear from you and hear your insights. Everyone should go check out how you can help them, no doubt about that. And right now I'm going to change it over to Dave.
Hang on, before you do, I do want to give you a little bit of a plug. You know, I took all the air in the room today, but you know, I mentioned that I was running a very large option firm, and you know, there are option leaders and there are option leaders, and I have to say that, you know, one of the reasons I like doing this with you, Jim, is because of how you've simplified options. And I think that's what scares most people. Simple is good in trading. Complicated is not good. And that's what I like the most about you. So
yeah, like last week, I identified that the energy might be turning up. So the energy shares like British Petroleum and others, the call options were extremely cheap. So that means the ticket to get into the game is very cheap. And now they're roaring because when you trade options, the concept is to buy the implied volatility low and sell it high, and that's what we're kind of doing here.
Yeah, that's it. And although I'm happy and respect the fact that you got this one, there's going to be times that you don't get it, and that's again what I like about you, because you know, when you don't have it right, you know how to get out before it's too, you know, that's the thing.
And size your position, just like you're sizing your position.
That's right.
Even though I thought for sure it was going up this week, I didn't put $10 million into the trade. So the bottom line is you're sizing. And again, over time, hopefully, like, well, I was like that movie, The Big Short. Those guys who worked in their apartment or their garage for 30 grand, they turned it into 100 grand, turned into 30 million. Because like they said, people don't think bad things are going to happen, which means the options are going to be very cheap. And when they do happen, you'll make a lot. And when you're wrong, you lose the small amount. That's the idea of what we're doing.
All right. See, I just wanted you to talk a little bit. Anyway, thanks, Jim. I appreciate it.
We'll see you then, Norm. And David, back to you, buddy.
All right. Thanks, guys. A lot of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. Also, you can just go to TimingResearch.com and get access to any of the past shows and events, and including this one as soon as I can get it posted. And just want to thank my guests again for today, Norman Hallett of thedisciplinetrader.com and Their Money, Your Profits.com. Also, the Option Professor of optionprofessor.com. Thanks, everyone.